Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. French President Emmanuel Macron tells Bloomberg he is open to seeing a major French bank acquired by an EU rival to boost financial integration. He spoke exclusively to our editor-in-chief, John Micklethwait.
This is a totally new world, and we do need this new business model for the Europeans. More innovation, more investment.
Janet Yellen admits China may retaliate against tariff hikes from the Biden administration. We hear exclusively from the US Treasury Secretary later this hour. Asia tech stocks higher ahead of earnings from Alibaba and Tencent. Traders await the US CPI print for fresh clues on Fed policy. And we are live in Doha for the Qatar Economic Forum.
That's right, Tom. This year's theme is a world remade, navigating the year of uncertainty. The event will explore the issues driving global boardroom discussions and spotlight the Gulf's rising prominence. We will bring you great conversations throughout the day, including from the Qatari Prime Minister and the Polish President.
OK, let's check in on the markets then. As we look at futures, essentially flat here in Europe. We're going to get inflation data out of Germany at around 7 a.m. UK time, and then UK wages and the jobs picture in terms of unemployment. That data crossing as well for the UK to round out the picture. Does it build on what seems like a dovish pivot now from the Bank of England, and possibly as well underscore expectations from some that maybe the BOE can go in June, possibly. European futures currently flat. UK, FTSE 100, you're looking lower by about 0.2%, so losses of 18 points. We look at iron ore, where prices are softer as well, and the impact on the mining sector here. S&P futures currently pointing lower just by 0.1%, a flat session, a flat close to the day yesterday, essentially for US stocks. The Nasdaq just eking out gains of 0.2%. Speaking of which, you're currently looking at losses on the Nasdaq of 24 points, down 0.1%. We also have producer prices out of the US later today as well, ahead of that key CPI print on Wednesday, of course. Let's flip the board and look cross-asset then, with a focus on the US 10-year to kick things off, the benchmark. Again, there's going to be a bit of a holding pattern you would expect until that inflation print starts to build out and the story is rounded out. Tuesday, of course, late today US time, and then with the CPI on Wednesday. Currently, you're looking at 448 on the US benchmark. Euro dollar 107, not a lot of movement there on single currency. Brent $83 a barrel, currently down up 0.1%, 83.47. And iron ore, there's the pressure coming through, down around 1.7%, tying to renewed concerns about the real estate sector in China. Iron ore currently down 1.7%. Let's cross over to Asia. It's a big day in terms of the earnings stories from Tencent and Alibaba. Avra Hong standing by in Singapore. Avra, what else are you talking about?
Yeah, we're talking about how markets in the Asia Pacific are in wait-and-see mode, and you really get the feeling that it's going to be this way until we get the US CPI print. On the Nikkei, it's been pretty range-bound. Chinese stock benchmarks have been erasing earlier gains. Let's flip the board and take you to what we're seeing in Hong Kong specifically, because that is where you're seeing some green on the Chinese tech names. As you say, we're keeping an eye on the Tencent, Alibaba earnings, whether or not their earnings scorecards can justify their valuation. There is some optimism surrounding it. That's why the stocks are in the green. But it's not just about whether these companies do well. That's going to be a key test for them. It's also how it will help potentially to justify the Chinese equities rebound. We're going to be keeping a close watch on the cloud revenues as well as potentially those share buyback plans. Let's flip the board and take you to Japan, where the bond sell-off is extending for another session. We're seeing on the 2.5s and the 10s, the yield hitting highest level in more than a decade. Sparked yesterday, of course, by the BOJ reducing the bond purchases in the 5 to 10 year zone. Our strategists say that it's not that unlikely to see potentially something coming through in the 3 to 5 year zone. And this idea that this will help to shrink the yield gap and support the weak Japanese currency. But let's flip the board, because I want to highlight the correlation between them has been detaching. Despite these shrinking yield gaps, the dollar yen has been actually moving back up towards 160, despite what we saw a couple of weeks ago, which is believed to be intervention. One explanation for this could be that currency traders more focused on the short-term rates and whether or not we actually see another rate hike from the BOJ. Tom.
That's really interesting. High yield doesn't necessarily mean support for the Japanese yen. The currency currently under pressure, down 0.1% at 156.42. Avery Hong with a market check out of Asia. Thank you very much indeed. To one of our key interviews, of course, an exclusive with the French president. Emmanuel Macron is open to seeing a major French bank like SocGen taken over by a European rival. We spoke exclusively with Macron as he hosted a global investment summit in Versailles. Alan Katz.
Dealing as Europeans means that you need consolidation as Europeans.
So it could be cross-border mergers in both directions.
This is a totally new world. And we do need this new business model for the Europeans. More innovation, more investment, single market and capital market union, and a relevant trade policy.
OK, that, of course, was the French President, Emmanuel Macron. Let's get more details on this story, this exclusive conversation, of course, with the French President. Bring in Bloomberg's Paris Bureau Chief, Alan Katz. Alan, how much support does Macron have for ideas like expanding that EU budget by €1 trillion? Are the Germans on board with that?
Well, that's a good question. Probably not coincidentally. Emmanuel Macron's comment on that $1 trillion sounds a lot like a report that was put out by a guy named Christian Noyer, who's the former president of the Bank of France, who's also said that the EU needs about €1 trillion more in spending, both public and private, to meet its climate goals. And so in some ways, it's sort of, as it often is, it seems a bit of a Franco-French view on things. And whether or not the Germans would really come back to support it is really not clear yet.
He was also asked about the prospects of the oil giant Total moving its listing to the US, something they flirted with as an idea. What was his response to that prospect?
Well, when John Micklethwait, our editor-in-chief, asked him about that, he said, would you like that? Macron responded, not at all. Now, he then went on to claim that, it's just a rumor and we'll have to wait and see what really happens. Of course, it's not a rumor. The CEO of Total told Javier Blas, a Bloomberg columnist, that he was considering this and that he was going to hopefully come to a decision by September. So it's more than just a rumor. But the response was he doesn't like it. He did not indicate necessarily any intervention, any active move to prevent it, but he certainly expressed his displeasure with the idea.
OK, Bloomberg's Paris Bureau Chief, Alan Katz, thank you very much indeed with the context around that exclusive interview, of course, with the French President, Emmanuel Macron. Now, Goldman Sachs' chairman and CEO David Solomon was also at the Choose France summit. He spoke with us about his concerns around the US budget deficit.
The level of debt in the United States, the level of spending is something that we need a sharper focus on and more dialogue around than what we've seen. We obviously had a pandemic. We made a bunch of decisions, in that pandemic, but we're long out of that pandemic, and the spending levels, are continuing at a pace that I think is raising our debt level and creating issues for us down the road.
Meanwhile, Bank of America CEO Brian Moynihan says US consumers are still in good shape despite elevated interest rates. He told us even after easing begins, the Fed's terminal rate is likely to be much higher than we've seen in decades.
What the Fed is doing with rate structure is have the impact they want. On the other hand, the economy's kind of there, and now we got to be careful we don't overshoot the other way. It's right now we have a no landing, honestly, a 2% growth rate, because you can't say it's a soft landing. But that's been pushed out to when it occurs, and we got to be careful that we don't overshoot, because you see the consumer confidence numbers tipping down a little bit. That's what you got to be careful of. If the consumer leaves the game, it's hard to get them restarted.
OK, from Paris to Doha, then, the Qatar Economic Forum, QEF, powered by Bloomberg, is starting in Doha today. More than 1,000 businesses and government leaders taking part in discussions exploring issues dominating the global agenda. Let's bring in Bloomberg Horizon's Middle East and Africa anchor, Jemana Vazetchi, who is on the ground for us. Jemana, tell us about some of the key themes, then, that are being discussed on the ground at QEF.
Well, good morning, Tom. Things are officially going to kick off in a couple of hours. So you can see it is picking up behind me, a bit of a buzz here. And as you can imagine, one of the main themes is going to be geopolitics. Today is going to be a very geopolitical heavy day. We have a conversation with the Qatari Prime Minister. Francine will be doing that later on, discussions with the Polish President, President Duda. Also very important, General Petraeus as well. And you have to remember that Qatar is playing a crucial role when it does come to the geopolitics of the region in terms of mediating. We We've spoken a lot about that potential truce deal between Israel and Hamas. Qatar key there. But of course, it's not just the geopolitics. Economics front and center as well. We talk about Qatar National 2030 Vision, Saudi Vision 2030. Where do those economies stand vis-a-vis the implementation of those projects? And then, of course, not going to be a surprise to anyone, energy and the energy transition. A lot of the energy CEOs are coming here as well. Remember, Qatar is responsible for about 25% of the world's global needs for LNG. That was crucial around the time of the energy spike that we got in Europe last year. So plenty of discussions taking place. And of course, Tom, we're going to talk about artificial intelligence because everyone talks about AI these days.
They certainly do. Energy and AI. That's going to be really fascinating to listen into those conversations, of course, and get more takes there. Jemana, you're going to be on the ground for us throughout this session, throughout this event. Tell us about the links between QEF, this forum, and Africa.
Yes, really important question there, Tom. And actually, we were just speaking to the UNDP's regional Africa director a short while ago, and she was talking about how important it is to harness investments and capital into the African continent. They've just launched an innovation fund called Timbuktu. And again, this is coming from the perspective of by 2050, a quarter of the world's population is going to be domiciled within Africa, and yet it is not getting investment commensurate with that population growth. So one of the big themes is how we can create those investment opportunities, but also those partnerships between some of the GCC countries, companies here operating, and some of the African companies on the ground as well. One other thing I would also bring up is she talked a lot about climate financing and the fact that the African continent is feeling the effects of climate change, but it is, again, not receiving the adequate financing to deal with those climate mitigation adaptation asks that the world is asking for at this point in time. So a lot of conversations going on here, again, within the context of GCC, but also to the African continent as well. And those are all happening over the course of the next 3 days, Tom.
OK, Bloomberg Horizons anchor Jemana Besekci, who's on the ground for us, of course, at the Qatar Economic Forum. Thank you very much indeed. Here's what else to think about and have on your agenda for today. 7 a.m. UK time. We're going to get the jobs data then. The earnings, the wages. Wages expected to tick down a little lower. You're still seeing that growth, but that growth is expected to slow. And then, of course, the unemployment rate as well, expected to edge a little higher. We'll see, of course, how that ties into expectations around the Bank of England. But that's a really important data set that crosses 7 a.m. UK time. On the earnings front, in Asia, the spotlight is on the tech giants of China that are, of course, Alibaba and Tencent. And you're already seeing both of those stocks gaining on expectations that maybe the results will come through a little stronger than expected. But the details will cross, of course, in the next couple of hours. Really, really important in terms of the touch on the Chinese consumer and more broadly sentiment as well in that country. 1:30 p.m. UK time, you're going to get US PPI, producer prices expected to drop. Bloomberg Intelligence seeing views that maybe you get a bit of a pickup on the back of higher energy prices and material costs as well. And that, of course, tying in to the broader picture around inflation with CPI out on Wednesday. Coming up, Treasury Secretary Janet Yellen says she cannot rule out retaliation from China as Washington and Beijing's trade battle intensifies. More from our exclusive interview next. Plus, French President Emmanuel Macron telling Bloomberg there needs to be greater financial integration within the European Union. We will bring you more of that exclusive interview. This is Bloomberg.
The European Union is the most open place of the world. But you cannot survive if at the same time you have subsidies and overcapacities in China and protection in some part of the market, and Inflation Reduction Act and Buy American Act in the US. It doesn't fly 1 second.
That, of course, was the French President Emmanuel Macron speaking exclusively to Bloomberg at the Choose France summit. Meanwhile, Treasury Secretary Janet Yellen has said that China could always retaliate against any steps the US takes to protect its critical new industries. Yellen declined to confirm to Bloomberg and confirm Bloomberg reporting that the Biden administration is about to hike those tariffs on Chinese goods, including electric vehicles. But she did tell us exclusively about the president's thinking on trade tensions.
He believes it's unacceptable, as I do, to be completely dependent on China in these areas. And he wants to make sure, given that China is really not playing by the rules, in the sense they have enormous subsidies in critical areas of advanced manufacturing, has resulted in overcapacity. He wants to make sure that the stimulus that's being provided through the Inflation Reduction Act to support these industries, and these are industries that are creating good manufacturing jobs in parts of the country that have been overlooked or have suffered from deindustrialization in the past. The president wants to make sure that he protects these investments. And I don't want to get ahead of the 301 review on tariffs, but this is a commitment that President Biden has made, and I agree with it. I was in China just a couple of weeks ago and made clear that we would not allow Chinese overcapacity to harm our emerging industries.
Does the U.S. want a trade war, though, with China?
We believe that we should have a deep and productive, and that we do in most areas, trade and investment relationship. We're working to stabilize our economic relationship. We do not wish to disengage from China economically, but we do think that the playing field should be fair. And China engages in unfair practices like massive subsidies of industries they've decided are critical. And those are cases where we will act to protect ourselves.
We've seen Beijing in the past, though, respond, and it's become tit for tat. Are you expecting a response? Could they go after Tesla or maybe American farm products?
Well, President Biden believes that anything we do should be targeted to our concerns and not broad-based. And hopefully we will not see a significant Chinese response, but that's always a possibility.
US Treasury Secretary Janet Yellen speaking exclusively to Bloomberg's Anne-Marie Hordern. Let's get more then on the Chinese reaction, potential reaction to the story, and bring in Bloomberg's James Mager, who is in Beijing for us. James, give us a sense, given China's recent history, in terms of the potential response to these expected tariffs coming through from the US. What is your sense of how Beijing is likely to respond?
I think based on history, if you look at what happened in 2018 and 2019, their response to tariff was tariffs. There was very clear, that they came out outright and said that they would respond in kind to these kinds of US actions. If you see the reactions to European efforts to put tariffs on Chinese goods, whether it was solar panels in the 2010s or now the EV car investigation, China has also responded in the 2010s on solar with tariffs, and they're responding now by starting an investigation into French brandy exports into China, which would likely put tariffs on those goods as well. So the first step, I think, if there is to be a retaliatory step, it could be tariffs on US goods. Another step they could take is to move trade purchases to other countries. And we did see that again during the first trade war under President Donald Trump, where you saw a gradual shift in trade purchases, especially of agricultural products, from the US to places like Argentina, Brazil, Russia. So the US is now buying a lot of corn from Brazil, which they didn't used to do. They're buying a lot more soybeans from Argentina and Brazil, and that increased during the trade war and really hasn't gone down. So you could see also a shift of those kind of purchases, especially because most of those purchases into China are by state-owned enterprises like COFCO. And so the Chinese government has the ability to tell those companies, don't buy US or buy from somewhere else. So those are the two, I think, the major, immediate steps that they could take. The bigger thing is also going to be, where does the trade go that doesn't go to the US anymore? I think for EVs, it's not really a big question because the US doesn't buy a lot of Chinese EVs, but there will be trade diversion of Chinese exports to other places, whether that's South America, whether that's Europe, other places like that. You're already seeing South American countries putting tariffs on Chinese metals exports because they feel they're being flooded by exports that aren't going to America anymore. So will there be a trade reaction from other countries as US actions cause a reshuffling of where goods are traded around the world and where they go? So it's another thing to look at. It's not a Chinese retaliation, but it is an effect from China.
Yeah, that's really interesting, and it's a trend that no doubt you and the team will be watching. How are you thinking about characterising this? Is this a new normal? Is it a significant step up in tensions, or is it the start of, in fact, of a new phase of a new trade war between the two powers?
I mean, I think the new normal. This is the new normal of increasingly separated trade blocs. The U.S. is very clearly setting up a system where they've created a defensive wall around the sectors they've identified as strategic, so that Chinese goods are limited in how much they can sell into those things. You're seeing that in solar panels and EVs, but you're also seeing that in batteries, where the trend is, and over the next few years, the IRA rules will mean that Chinese companies and their metals will not be able to sell into the U.S. battery market. You're also seeing China is doing the same thing. There are no foreign companies that sell batteries in China for the Chinese EV market. They were excluded in the 2010s, and then by the time foreign companies could actually get back into that market, Qatar, BYD, and the other Chinese companies were all basically too competitive and too good and too cheap, and so foreign companies now can't compete here anymore. I think the real interesting thing is going to be looking forward is not in America and not in China, but in third countries. How does that competition shape up? Are American companies competitive in Thailand, or are Japanese companies competitive in Thailand anymore with China, or will there be increasingly trade blocs where it's just Chinese companies, it's just American allied companies? So I think that's where things are going. Okay.
James Mager in Beijing, thank you very much indeed. There's plenty more coming up, including those conversations, of course, with the French president and the CEO of Goldman Sachs. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. To some of the other stories now making the news this Tuesday. Melinda French Gates is resigning from her role as co-chair of the Bill and Melinda Gates Foundation. In a post on X, Gates announced she is ready to move on to the next chapter of her philanthropy work. She'll depart with an additional $2.5 billion that she's pledged to commit to her work on behalf of women and families. Anglo American has rejected a second takeover approach from rival miner BHP. The latest offer from the world's largest miner valued Anglo at $43 billion. BNP is seeking to buy Anglo for its South American copper assets. That would make it the #1 copper producer alongside its sprawling portfolio of iron ore and coal assets. And Bloomberg has learned the four parties in talks to form the next Dutch government plan to cancel a 15% tax on share buybacks. The Netherlands last year introduced the tax on share buybacks, which is scheduled to come into effect in 2025. The law triggered a sell-off in shares of Netherlands-based banks and other companies when it was approved by the Dutch Parliament. And a former UBS risk manager has slammed Archegos Capital Management for what he called lies. Taking the stand as the first witness at the fraud and market manipulation trial of Archegos founder Bill Huang, Brian Fairbanks described the internal debate at UBS over Archegos as a client and how Huang's office allegedly deceived the bank about its investments. Huang, who denies the charges, is accused of lying to counterparty banks to inflate the value of stocks on which Archegos had placed highly leveraged bets. Coming up, more from our exclusive interview with the French President, Emmanuel Macron, as he calls for greater financial integration within the European Union. That is next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. French President Emmanuel Macron tells Bloomberg he is open to seeing a major French bank acquired by an EU rival to boost financial integration. He spoke exclusively to our editor-in-chief, John Micklethwait.
This is a totally new world. And we do need this new business model for the Europeans. More innovation, more investment.
Janet Yellen admits China may retaliate against tariff hikes from the Biden administration. We hear exclusively from the US Treasury Secretary this hour. Asia tech stocks higher ahead of earnings from Alibaba and Tencent. Traders await the US CPI print for fresh clues on Fed policy. And a reminder, it is still earnings season with a focus here on Europe when it comes to Bayer crossing just in the last couple of seconds. And it's a beat in terms of the Q1 for Bayer. This stock, by the way, down about 12% year to date. There's a focus, of course, on the litigation costs still linked to that Roundup weed killer, but also deleveraging attempts and the pharma pipeline for this company. Core earnings per share coming in at a beat in the first quarter for Bayer, 2.82 euros. The estimates have been for 2.3 euros. So it's a beat there in terms of core EPS. In terms of sales, coming a little softer, 13.7, close to 13.8 billion euros. The estimates had been for a little over 14 billion euros. And in terms of the margin story, there's strength there as well, relative, of course. First quarter adjusted margin coming in at 32.1%, above the estimates. And again, the first quarter adjusted earnings for Bayer coming in as a beat, 4.41 billion euros in the first quarter. The estimates had been for 4.2 billion. So a bit of a beat there coming through in terms of the first quarter for, of course, that drug and chemicals maker. They have confirmed their 2024 outlook. To the defence space now, where Rheinmetall is reporting as well, with a focus on ammunition demand, order volumes as well. In the first quarter, we're looking at sales of 1.6 billion euros. First quarter sales for Rheinmetall, it's challenging normally the first quarter for this company. First quarter sales coming in slightly below the estimates. It's a miss in terms of the first quarter sales for this company. The defence company, of course, 1.6 billion euros. The estimates have been for 1.7. In terms of the order backlog, 40 billion euros in terms of the order backlog in the first quarter. That's an increase of 43% year on year. Confirming their guidance for 2024. Operating margin, you're coming in terms of operating profit, I should say, a little softer than the estimates in terms of the operating profit, 134 million euros. The estimates have been for 145 million euros. They see full year sales of about 10 billion. So the full year sales picture is slightly brighter than the estimates. The estimates had been for 9.85 billion. They now see full year sales at about 10 billion euros. Let's check in on these markets. Of course, investors will be digesting some of the earnings story, and it picks up, of course, later in the week, but also the economic data that's going to filter through the session. You have inflation data crossing from Germany. You have data on wages and unemployment out of the UK at 7 a.m. UK time, and then, of course, producer prices, PPI, out of the US later today. European futures currently unchanged. In terms of the UK, FTSE 100 looking to losses of about 0.2%, a little bit of pressure coming down on iron ore. S&P futures still above that 5,200 level, flat after a sluggish session yesterday on Wall Street. The Nasdaq did eke out gains of 0.2%, currently pointing lower by 0.1%. Let's flip the board and look cross-asset then. The benchmark US 10-year, not going to see a lot of moves, you would have thought, across the Treasury curve until we get more detail on inflation story. But 448 on the benchmark right now. Euro dollar, 107 on the single currency, 83.51 on Brent, just up 0.2%. Iron ore down 1.8%. Again, more concerns about the property sector with a missed bond payment, dollar bond payment from one of the property companies over there, 114.90 on iron ore, down 1.8%. Let's get back to one of the key conversations then of the week for Bloomberg, and that's with the French President, Emmanuel Macron, saying he would be open to seeing a major French bank being taken over by an EU rival in order to spur deeper integration. We spoke exclusively with Macron as he hosted a global investment summit in Versailles, where he told us the region's only chance to go toe-to-toe with China and the US is to better protect its interests and reduce regulation.
We have to completely reset our model. I think now France clearly is one of the leading economy. We are number one in attractiveness. We've been number one during the past 5 years. And if you take job creation, growth, we are one or second in the Eurozone.
Do you think you're being held back by the...
We are here. Now when I take Europe, and especially the EU as a whole, but it's true as well for UK, we have this issue in terms of business model. Why? Because we had low-cost energy, thanks to Russia. Production, thanks to Central and Eastern European countries with quite low costs. A market for exports China, and a geopolitical umbrella US. These pillars are being completely revised, totally.
Yes.
And it's no more valid. So we have to reinvent. What and how? By creating much more value on our own, by being much more innovative, by creating much more jobs and jobs with value, good jobs, I would say, on our continent. The key point is deliver much more innovation and productivity policy, public and private. So the second key reforms is to accelerate decarbonization and especially our electricity policy, because through renewables and nuclear energy, we can deliver low carbon, sovereign, and low-cost energy, which is much more than importing gas and fossil fuels. Third, we need much more investment based on common budget, and in my view, I mean, based on public reports and figures, we need 1 trillion more in terms of budget, in terms of spending. And in parallel, we have to make the capital market union a reality, which is not yet the case.
Can I come on the capital market union? Because you have here an example. You have BNP.
Yeah.
Now probably Europe's and definitely the Eurozone's most successful bank, worth $80 billion. But you are entertaining these people like JP Morgan and so on. JP Morgan is worth $550 billion. It's 9 times as big. Bank of America, 4 times as big. And the reason why is BNP Paribas cannot expand throughout the European Union and take over other banks.
This is very true. We have several issues.
You would like to see BNP take over one of these, take over a German bank or an Italian one, if it was possible.
I mean, we do need a consolidation, but we do need as well an actual domestic market as Europeans, which is not the case. We have to deal with 27 regulations. You know, energy, finance, and telco are the key sectors where single market doesn't exist. It was a choice at the very beginning. I do agree that we have now to open this box and to deliver a single market approach. It's much more efficient. So our view is that now we want to elaborate a Franco-German consensus on capital market union to have a single system of resolution, a single supervision, and a much more integrated capital market union.
But would you be happy with, say, Spain's Santander coming and buying Societe Generale as part of that?
It's part of the market, but dealing as Europeans means that you need consolidation as Europeans.
So it could be cross-border mergers in both directions.
But this one is for banking union.
Yeah.
It's already on track. Now we have to do it for capital market union, which is broader,
more difficult.
and even more difficult. But we started to do so at a political level during the last council, and I do believe that we can find a Franco-German agreement. But why? I want you to just understand the challenge for us. 75% of our financing as Europeans go through banks and insurance. So we need much more consolidation, but we need a clear circulation of the savings all around the place. This is the first objective, to be much more efficient and to be sure that our savings will be invested in the right sectors and the right geographies. Second, every year, 300 billion savings goes to finance the US economy because we are not attractive. So in parallel with this capital market union and this simplification, having an actual single market, we clearly need the same level playing field as the US in terms of financing, which means when you take solvency and Basel, as long as it's not implemented by the US competitors, it should not be implemented by the European competitors. Otherwise, this is a killer for risk-taking, because these regulations just prevent you, our banks, from investing in equity, which is exactly what we need. And if you take the key driver of this difference between the US and Europe, the key driver is the fact that the US economy innovated and invested much more in equity and innovation than the European economy.
French President Emmanuel Macron, of course, speaking exclusively with Bloomberg editor-in-chief John Micklethwait in Versailles. Now, the president of the European Investment Bank has told Bloomberg that the EIB is ready to play its role in supporting Europe's defence industry. Nadia Calvino says its capital rules could be adjusted to unlock further investment in the continent's economy.
Most multilateral development institutions have already removed these outdated kind of nominal ratios, which are enshrined in the statute and which are very rigid and do not respond anymore to our business model. They don't take into account the risk profile of the investments or the mandates and guarantees. And so many of them have also gone for capital increases. In the case of the European Investment Bank, it's a very good business for European countries, EU countries, because with 22 billion euros in paid in capital, we have mobilized 5 trillion euros in investment, and we don't need, if we remove this gearing ratio, so we remove it from the statute, this outdated constraint, we don't need a capital increase in order to be able to fulfill our function as financing arm of the EU. Indeed, I think it's quite clear that we need to step up our support to Europe's security and defense industry. We need to reinforce our capacity in this area. And the European Investment Bank is ready to play its role in supporting Europe's defense industry.
European Investment Bank President Nadia Calviño speaking exclusively to Bloomberg's Oliver Crook. Now, US Secretary of State Antony Blinken has arrived in Kyiv to reinforce US support for Ukraine. It comes after delays in billions of dollars, of course, of military aid forced Ukraine to ration munitions and prompted fears the US would abandon its partner in the face of Russia's invasion. Moscow has launched a major offensive in the northeast Kharkiv region, one of its most aggressive campaigns since the war began in February 2022. Coming up, Goldman Sachs Chairman CEO David Solomon tells Bloomberg the bank has tripled its headcount in Paris in 5 years. We bring you more from that exclusive interview at the Choose Paris Summit. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Goldman Sachs expects IPO activity to pick up in the second half of the year and continue into 2025. An exclusive interview, Chairman and CEO of Goldman Sachs, David Solomon, told us it is concerning that companies are staying private for longer.
I do worry that the structure of the equity markets, particularly in the United States, but this is true all over the world, are bringing fewer and fewer public companies. And that is concerning. There's obviously an abundance of capital available in private markets, but I do think it's important that we have open, accommodative, strong public markets. There's tremendous disclosure, transparency in public markets. I think that's good for capital deployment. And, you know, I am concerned that the breadth of the public markets is getting a little bit more narrow, and I think that's something for us all to watch and think about.
You've got visibility on the pipeline. Do you see that improving at all?
Well, it's easy to improve when it was zero. So the IPO market closed. It has opened up. We've seen some very successful IPOs during the course of the first few months of the year. I think the level of IPO activity will pick up in the second half of the year into 2025. It's not going to be as robust as it was during 2021, but I think we'll move back to what I'd call a more normalized environment for IPOs. That said, the overall size or number of companies coming public, companies are staying private longer, they have more access to capital, and that's something I think it's important for us to think about. There are consequences associated with that.
Let's think about M&A as well. It's difficult in my position to understand which deal can get done and which deal can't get done based on current regulation. Tapestry, Capri, apparently that's a problem. Other deals can go forward. How much is that holding back M&A activity in the United States?
I think there's no question that the regulatory environment has been a headwind to M&A activity. I'd say, for example, large cap tech has kind of closed out because of the regulatory environment for making significant acquisitions. And I do think the regulatory environment has made it harder to understand or really expect exactly how it will intervene. And so I think that's had a chilling effect. That said, the world's a competitive place. Scale matters everywhere you turn. People are going to do what they need to do strategically to advance their position. And if they have to litigate it, they'll litigate it. Generally, those companies that have chosen to litigate have generally made progress. Nobody wants to go down that path. But I think at the end of the day, scale matters. And confidence matters. And so confidence has been improving over the last 12 months. Certainly in 2022 and 2023, you didn't have high CEO confidence. That affects M&A. But based on the indicators that we can see, some that are visible, some that aren't, I think dialogue's picking up, and my guess is we'll move back to what I'd call more normalized levels as we finish the year.
Goldman Sachs Chairman and CEO David Solomon speaking to us exclusively at the Choose France Summit. And Bank of America's Chairman and CEO Brian Moynihan says US consumers helped by wage growth remain in good shape, even amid elevated interest rates. Moynihan spoke exclusively with Bloomberg's Jonathan Ferro on the sidelines of that same summit in Versailles, France.
People are getting used to it. But the reality is, at some point, the Fed has to bring the front end rate to get to a normalized curve, because an inverted curve forever doesn't sort of economically compute. But I think our team thinks that the terminal rate, the end rate that they'll get to will be more in the 3.5% range as opposed to 50 basis point range or 1% range. And we haven't really had that since before the financial crisis. There was a moment in 16, 17, 18 where they raised rates, and they already started bringing them down to 19. So frankly, in our team, I say, if you're under 40, you've never seen this kind of rate environment. And this is normal. And so 3% front end, 3.5%, 4.5% 10-year, and people will get used to it, because America did a lot of economic activity prior to 2007 for the 200-plus years of existence. So people have been used to it. It's just that we're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We're hearing from some companies that maybe there are some cracks. We heard from Starbucks, McDonald's offering a similar view on the US consumer. You've got some 69 million customers. What do you see? Do you see those cracks at all starting to emerge this year?
So if you think about it, where would the cracks emerge? You talked about the average account balances. They're still, especially for households 75, 100,000 and below, the account balances are higher than the pandemic by a lot. If you think about the spending settled into a more normal, where it was in 16, 17, 18, the Fed was raising rates, inflation, they're pushing, inflation was higher, they're pushing it down or holding it steady. So that's normal. And then on the credit side, we're just normalizing to where we were in 19. So in 2019 was a 50-year low in credit costs in our company, and basically last quarter we were a little bit higher than that. And so we're normalizing, so it's increasing off a base. If people say, oh, your charge-offs are going up, but they're getting back to where they were in 19, and frankly, people thought that was very good credit, and it factually was. And so the question is where they go next. The good news is we're starting to see delinquencies flatten back out, i.e. they're not growing anymore. They normalize, and then they're staying. That's good news on the consumer side. So it's all okay. It's just higher rates are tough on people on the mortgage market. Mortgage originations are way down. Higher rates are tough on corporations using the lines a little bit less because, small, medium-sized companies, because it costs more. And if it costs more, you're going to be more judicious about it. So that kind of adjustment, what the Fed is doing with rate structure, is having the impact they want. On the other hand, the economy is kind of there, and now we got to be careful we don't overshoot the other way. It's right now we have a no landing, honestly, a 2% growth rate, because you can't say it's a soft landing. But that's been pushed out to when it occurs. And we got to be careful that we don't overshoot, because you see the consumer confidence numbers tipping down a little bit. That's what you got to be careful of. The consumer leaves the game, it's hard to get them restarted.
Bank of America's Brian Moynihan, of course, speaking exclusively to Bloomberg's Jonathan Ferro in France. There is plenty more coming up. Stay with us. This is Bloomberg.
Okay, ChatGPT. I'm sharing with you the plot now. I'm wondering if you can give me a really brief one-sentence overview of what you see.
The plot displays smoothed average, minimum, and maximum temperatures throughout 2018, with a notable annotation marking a big rainfall event in late September.
Fantastic. I have another question for you. Which months do you see the hottest temperatures, and roughly what temperatures do those correspond to?
The hottest temperatures occur around July and August. The maximum temperature during these months is roughly between 25 degrees and 30 degrees, 77 degrees Fahrenheit to 86 degrees Fahrenheit.
OK, that was a demo of OpenAI launching a faster and cheaper version of the AI model that underpins its chatbot, ChatGPT. This was GPT-4 Zero. It is a model that includes and responds more quickly, they say, to text, audio and visual inputs as well. So a pretty significant move coming through from OpenAI. They are, of course, facing more competition from the likes of Cohere, based in the US and Canada, but also Llama of Meta and Google DeepMind as well. But a really interesting update coming through from OpenAI. Staying on the tech space, by the way, it's a big day in terms of the earnings coming through from China, and you're seeing moves around these stocks already. Tencent and Alibaba. Let's start with Tencent then, because to focus on this company is to focus on the financial services part of this company, particularly through its WeChat app, but also the gaming and the advertising revenue. Of course, it is a gauge on the health of the Chinese consumer as well. And so some of the estimates coming through in terms of the revenue, operating profit, 45 billion yuan. It could be challenged again, but again, really focus in on the gaming pipeline. You've seen a bit of an ease back in terms of the crackdown there from regulators. That may come through as a benefit for Tencent, but also financial services and advertising. When it comes to Alibaba, this is a company that is facing some headwinds of its own as well. The idea that it was going to restructure, spin off a lot of assets, that's been reworked, changes at the top in terms of executives. But again, in terms of the e-commerce business, a real touch point in terms of the sentiment around the Chinese consumer. And then it's got its cloud division as well. So look at those two areas. It may also announce some news around further consolidation around its core businesses as well. So there's some of the previews in terms of the estimates coming through from Alibaba. Again, Tencent and Alibaba are really central in terms of the tech story that is coming through from China and across Asia as well. The meme stock vibe is back. By the way, if you notice this, GameStop, Roaring Kitty is back, or at least that is the speculation, putting out a tweet, and you saw GameStop and other meme stocks just soaring yesterday to levels we haven't seen since about early 2021, when the likes of GameStop rallied, 1,000% or something like that, very close to that at least. So that is another factor that's at play, a bit of FOMO coming back, Roaring Kitty sparking that speculation. It's a story be across, of course, this week and today as well. Plenty more coming up. The Qatar Economic Forum, of course, in Doha. We'll bring you some highlights of that event and the key conversations through today, including the Malaysian PM, HSBC CEO, and the President and CEO, Franklin Templeton. Markets Today, though, is next. Stay with us. This is Bloomberg.